strategic products. And I have two fabulous team members, which is Kathy Gold and Tammy Gastraj. They are both part of the strategic products team. As a finance leader, I believe that we're part of a cohort revitalizing the US economy and breaking the cycle of generational renters. So now more than ever, we are tasked to reset our minds to reach beyond our traditional methods of finance and communication. By doing so, we can influence for impact and sales digitally and importantly, turn successes into a source of generational wealth for households. So we continue to evolve mortgage products to better serve borrowers, and we're unveiling the Seth Star program today. The program provides a 30-year fixed rate FHA and Fannie Mae HFA preferred mortgage loan and additional financial assistance helping a homebuyer with their required investment and down payment. Today, presenting the Seth Star program is Rhonda. And Rhonda Mitchell is a home ownership director for the Southeast Texas Housing Finance Corporation, also known as SETH. She has worked with a variety of local down payment assistance programs throughout her career. And before joining SETH in 2006, she was a CRA loan originator known for working with many local assistance programs. Her lending background has proved helpful in the development and training and marketing of SETH single family programs. Current SETH programs include SETH 5-Star, SETH Gold Star, and the SETH MCC program. And, thank you so much again, Rhonda, for being here because I understand your office was even affected by some weather issues. Is that correct?
That is correct. Thank you. Yeah, so I am office in Houston, and we did have a visit last night or early this morning from Mr. Nicholas. So he did pay our area a visit, and we did. My office did great. My house did great. So thanks so much for asking about that. But so nothing was going to keep me. No hurricane, right? No force winds, no nothing's going to keep me though from the training today. So I am super excited to be able to share our new Seth Star program. We call this our Seth Star Partner Program. So this is a program that is specifically created, right, in partnership with Mountain West. And it is with Mountain West that we are able to reach out to mortgage brokers across Texas. So we are, again, just beyond appreciative of the effort and the work and the input that Mountain West has provided to Seth. I mean, they are a great partner for us for sure. And so they allow us this opportunity to get our programs out to the mortgage broker community. And we know that you are a valuable resource there in the industry. So again, this is a product that is created specifically to work with mortgage brokers. So we really are very excited about this. The program does provide a 30-year fixed rate FHA or Fannie Mae HFA preferred mortgage loan and additional financial assistance helping a home buyer with their required investment and down payment. So our HFA preferred loan program, that's our conventional option with Fannie Mae. It does offer greater credit and underwriting flexibilities that are not available to lenders under standard Fannie Mae guidelines. And so as we continue on with the program, the training today, I will be sharing that with you and giving you some kind of tips and tricks working with the program. So the program description, so Seth Star. The assistance with Seth Star, so the down payment assistance is provided as a second loan. And those funds can be used for down payment and or closing costs, however the home buyer needs it applied. You're going to find that we've got options of up to 5%. So the max assistance, right, is going to be 5%. When we talk about those percentages, it's going to be based on that final total end all loan amount, including, if applicable, any MIP. So final total loan amount, and we're going to be, when we talk about the percentages, remember we're basing that percentage on that final loan amount. Second loan return obligation earns forgiveness monthly, $136 per month, and it will be completely forgiven after 3 years. So remember, DPA is provided again as that second loan forgiven in 3 years. So there's no payments attached to that. There's just forgiveness. And I always say, right, we tell everybody, we say it's better to forgive, right? Forgiving others is good. So that's what we built this program around, is that forgiveness structure. And we're going to be so forgiving, right, for your home buyer, that we're going to even forgive them monthly while during that 3 years. So that, let's say, for example, they're a year and a half in, 18 months in, they would be 50% forgiven, right? Because we're halfway through that 3 years. So they'd be 50% forgiven. So you see that if the borrower sells or refinances within the first 3 years, they're obligated to pay the remaining second loan amount. So in that example, right, where we have that 3-year forgivable second lien, we're looking at 18 months in. Should that borrower want to sell or refinance, they would repay half of the assistance. So if, say, they, for example, that their assistance was $3,000, half of that would be $1,500. So that $1,500 would be collected upon sale or refinance. So SETH will not resubordinate to allow the borrower to refinance during that forgiveness period, and that is explained in that note, and there are disclosures that your home buyer will be signing. The program, though, is going to provide for purchases only, so no refinances. So you can't use our product to refinance someone. The SETH Star program is for purchase transactions only. Borrower will be executing a second note and a second deed of trust. And seller concessions are permitted per agency guidelines. So your home buyer can still get any closing cost assistance from the seller, for example. That's still allowed. Remember, you follow agency guidelines for those amounts. So as we cover program guidelines, right? So debt to income for FHA loans with FICO score 680 or higher, it's 50% max DTI with AUS approval. FICO scores below 680, maximum DTI is going to be 45%, again with the AUS approval. For conventional loans, right, our Fannie Mae option, conventional, FICO score 680 and higher, it's a 50% max DU with DU approval. And FICO's below 680, it's a 45% max with DU approval. And remember, I said DU approval for the Fannie Mae options. So Fannie Mae, remember, DU approval only, and I'll be sure to remind you of that as we go forward. And when we talk about the FHA, I referred to AUS. So remember, for FHA, for example, that AUS, that could be LP or DU. And I'm going to pause for just a second to be sure and let everybody know that, I believe there is, and I'm not a Teams expert by any means, so y'all bear with me if I don't say this correct, and stop me if I'm saying something wrong. But I think there is an opportunity for you to ask questions via the chat box. And am I right in saying that?
Yes, there is a chat box option, and you may also raise your hand if you'd like. I will be reviewing the chat box periodically, or there will also be a chance to do a Q&A at the end of this session.
Thank you for that. I thought there was that opportunity. So, and I don't mind being interrupted. So if you do have questions while I'm on topic, feel free to ask away. But of course, we will take questions after training today. So occupant cosigners, conventional and FHA, are allowed to the extent permitted by FHA and Fannie Mae guides. Non-purchasing spouses are permitted. Cosigners, so allowable to the extent permitted by FHA and Fannie Mae. Now, a cosigner is a non-occupant, right? So a non-occupant who is cosigning for the promissory note to offer additional security for the mortgage loan. Evidence must be provided to show the borrower has sufficient income to make that monthly payment. And the cosigner may not occupy or take title to the property. Non-occupant co-borrowers are allowed per agency guidelines. Borrowers using the qualified median income, AMFI, special incentive may not use a cosigner. Persons living in the home persons living in the home cannot be considered cosigners. So anyone living in the home must be added that household income. So if they are a true cosigner, not occupying, right? We don't have to count their income when we qualify the home buyer for assistance. So that income can be used to qualify for the mortgage loan, but doesn't have to be used to qualify for the assistance. A caveat to that, though, is that that co-signer must not intend to own or occupy or sign the deed of trust. If they are going to own or occupy, right, they are a co-borrower, and their income is going to be counted for qualifying for the mortgage loan and qualifying for the assistance. And I hope I explained that correctly. And guys, if you feel like I need to go back over something, you be sure and get in that chat box, and I will be happy to recover that. So continuing on the guidelines, so DPA funds, right? DPA funds, remember we talked about, it's a percentage of that final total loan amount. And so DPA funds will be rounded to the nearest dollar. So for example, 50 cents will be rounded up, 49 cents will be rounded down. So when we do the math to get our assistance, we are going to be rounding up or down, rounding to that nearest whole dollar. Funds, of course, those DPA funds can be used toward the borrower's minimum investment. And funds can be applied toward down payment and or closing costs, however the home buyer needs it applied. And I say it like that because, say, for example, if you have a home buyer that maybe they want to put some of their own funds into the transaction, and maybe they have, $5,000 that they want to use for down payment, and they want to use our funds in addition to that, that is perfectly fine. So there's not an asset test or a requirement for that a home buyer can't invest any of their own funds in the transaction. They have a gift. They have a gift from an aunt, right? Grandma, grandparent, whatever. If they've got that gift, they can use that gift funds for their down payment and closing costs. And they can also still access our down payment and closing cost assistance in addition to that. So again, there's not a requirement or a test for those assets. Now they've got to follow agency guidelines with respect to that gift. If there's any, requirements that are needed to support proof of funds, that all applies. But again, remember, we're not going to stop them from using our program because of a gift or seller contributions. So there can be no cash back to the borrower at closing. So borrowers can be refunded their earnest money, any items they paid, but they can't get cash back. If there are any excess down payment assistance funds, so if our SETH funds are remaining, our DPA, any excess funds are to be applied as a principal reduction to the first mortgage loan. Our options for DPA, for FHA, we've got 4 and 5% DPA options. Our Fannie Mae preferred, right, and that's going to be those incomes that are below the 80% AMI. Those are 4 and 5% options, and we've got options for our Fannie Mae that are above the 80 AMI. So we've got some pretty large income limits there. We've got 4 and 5% options for those folks as well. Now our SETH MCC. So again, Mountain West being such a terrific partner, they joined and we worked this program, the SETH Star Partner Program, and made it available to our mortgage brokers. Well, Mountain West also joined the SETH MCC. And our SETH MCC is super special, guys. But Mountain West has joined, and that is something that can be combined with the SETH 5-star program. So it is available, our SETH MCC, though, is available for first-time home buyers only and one-unit properties only. So SETH Star, right, there's no first-time home buyer requirement for that product. But if using our MCC, we do have that first-time home buyer requirement for that MCC. Our SETH MCC provides a 40% tax credit. Max tax credit will be $2,000 a year. And our SETH MCC, again, you can combine our SETH MCC with SETH Star, and it's even a standalone product as well. But our SETH MCC is available at no cost to your home buyer. And that is drastically different from other MCC programs you're going to find out in the market, right? Other MCC programs are going to have a cost to the home buyer. Our cost to the home buyer is zero, zilcho, nada, just nothing. There is no cost to provide that SETH MCC. The mortgage MCC benefit, right? That $2,000 max a year, that MCC benefit can be used to qualify your home buyer for their mortgage loan. So now you're talking about an opportunity to use, like say if we take a $2,000 max, maybe they qualified for that max tax credit. If we take that $2,000 max tax credit, divide it by 12, that's now $166 a month benefit that you can use to qualify your home buyer for their SETH Star program, right? So win-win here. So I always say, you get a tax benefit with that SETH MCC for making the exact same mortgage payment you're going to make without it. So definitely, if your home buyer is eligible, this is something you want to offer them. I mean, gosh, again, making the same mortgage payment they would with the same assistance. Now you can get them a tax credit. So I say that, when you look at these programs and the differences between two, because I get asked this a lot, right? Why would I do both? What's the benefit? And you've got your SETH Star that's going to get your home buyer in the house, right? At closing, we always find that our home buyers, that biggest hurdle to purchasing a home is their down payment. So SETH Star is going to get them at the closing table with the down payment assistance. But the MCC is going to, through the use of tax credits, is going to make that mortgage payment more affordable, again, with those use of those tax credits. So it's a refundable tax credit they're taking advantage of while they're making their mortgage payment. So now you're creating an opportunity for additional income for your home buyer while they're making their mortgage payment, making, again, that mortgage payment more affordable, and of course your home buyer more successful. Recapture tax can apply in certain instances. There is a 9-year federal recapture tax that does apply when you're working with an MCC. And our SETH MCC is available, though, only for our following program areas. So it is not available across Texas the way SETH Star is, but our MCC is available in the cities of Deer Park, Dickinson, Lamarck, LaPorte, League City, Pasadena, Santa Fe, Shore Acres, Texas City, and Tomball, and in the counties of Austin, Brazoria, Chambers, Liberty, Matagorda, Walker, Waller, and Wharton. And I laugh because I think I sound like a weather report. Remember, we've had so many weather reports the last couple of days for my area that I feel like a weather report when I read these out. But these are the locations for the MCC. Remember, SETH Star is available all across Texas, but my SETH MCC is limited my specific jurisdictions. So as we continue on with the guidelines, remember for SETH Star, right, there's no first-time homebuyer requirement. Your homebuyer can even have home ownership interest in another property at time of closing. So they're permitted ownership in one other property at time of closing. So owning another property doesn't disqualify them from using the SETH Star program. So you may have a home buyer, maybe they've inherited a property with some cousins or aunt, uncle, whatever. That's fine. Remember, they can own one other property at time of closing and still use our SETH Star program. Now, property for SETH Star, homes must be located in Texas, but excluding the cities of El Paso, McKinney, Grand Prairie, and Travis County. So I have just a couple of areas that SETH Star is not available in, right? And I'm gonna wait because I know there's gonna be somebody that's saying, like, what did McKinney do to you? Like, why don't you like El Paso? What did they do to you? And I'll tell you, it's not that I don't like them. It's the opposite. It's that we do like them. We like them so much. So I'm a local housing finance agency, so that explains why I've got those limited areas for my SETH MCC. I have to operate those within my founding jurisdictions. And there's locals like us all across Texas, right? But our state legislature, they made it possible for us to run our SETH Star program statewide. And so being a local, we went to all the active locals in Texas and we said, hey, is it okay? We're coming to your town. And if it is okay with you, if you'll sign a piece of paper, you will pay back to you. So we pay back to a lot of the locals all across Texas. We pay back to them when we do loans within their community. And that gives them the opportunity to produce an income source, right? So they've got the ability to address housing needs within their communities. But I had a couple areas and they were like, no, hey, Rhonda, we don't want the competition, right? We've got some other programs out there. We feel like, your program would be competing with us. And that's not what we want to do, right? Because we want to work together with our locals, and our working together, right? We work together statewide to get housing needs met for our state. We work together nationally to get needs met. So again, working with these partners, not that I don't like them. So property must be located in a program area. 1-unit properties only, condos, PUDs, townhomes are permitted, and manufactured homes are permitted on FHA with a 680 FICO score. And I know I laugh because I got an email this morning about this asking me if that was an eligible product type for property. And so manufactured homes are permitted, FHA only, and remember you got to have that 680 FICO score. Purchase price and loan limits, right? So for Fannie Mae, the max purchase price is $484,350 for the entire state. For Fannie Mae, the loan limits apply, and we do have FHA sales price limits that are going to be listed by the county. So we do have a county location requirement, and we've got sales prices attached to those. Income limits and purchase price limits are going to be found at our website, SETHstarprogram.com. And the SETHstarprogram.com website, that was created just to be a service to you when you're working with our SETH Star program. It's a resource for you where you can quickly find income limits, purchase price limits, right? Those are all posted there very easily for you to locate. So I'll encourage you to take a visit, if you will, to that SETH Star program website. You'll really enjoy it. And remember, homebuyer education is required when you're working with the SETH Star program. So homebuyer education is required, and only the SETH Homebuyer Education course is accepted. It is an online class, and each borrower on the mortgage loan must complete the course individually. If you have a co-signer or a non-purchasing spouse, they are not required to complete the Homebuyer Education course. But borrower co-borrowers, owner-occupying, right? They are going to be required to complete the course individually. Ask your home buyers to visit SETHstarprogram.com, and there they can access the homebuyer education very quickly. The homebuyer education class must be completed prior to closing. The cost for the class is $100 if there is one borrower on the mortgage loan, and $60 each if there are 2 or more borrowers on the mortgage loan. The class is also offered in English and Spanish. And there's not a requirement that the homebuyer take a specific amount of time to take the class, so it's not an 8-hour required visit for the class. The class is self-paced, and the material itself, remember, it's offered in English and Spanish, but the material is offered in text format so they can read the material, or it's offered in video format so they can watch videos, or they can do both if they choose. It is homebuyer education, so it's going to cover budgeting, maintaining a home, mortgage terms. You are so much better served, my professionals. You're so much better served here, taking training on the guidelines and how to work this program for your home buyer. If you want to take homebuyer education, just send me an email. I'll be glad to send you a link so that you can view the class. But you're going to find it's pretty basic stuff. It really is it's homebuyer education. Within the homebuyer education, though, there is an opportunity for your homebuyer there's a budgeting section, right? And so they can go into that budgeting section. Remember, it's online. It's there, right? They can interact with that budgeting section, so they can enter, their movie money, their car payment, their house payment, and they can really make that budgeting section their own. So that is a neat feature of our homebuyer education class. Now, the class is provided free for our charter level borrowers with our Fannie Mae option, and those are that below 80 AMI. And when you visit our website, income limits, you'll see that we've got those charter level income borrowers marked out for our Fannie Mae options as well. So borrowers that meet those charter level income limits with Fannie Mae options, they do get free homebuyer education from SETH. You are going to contact Mountain West Financial when you have one of those borrowers, and they'll be assured and get you that code to take the free homebuyer education for your home buyer. Mortgage insurance requirements. So mortgage insurance for conventional loans, right? Standard MI is required for borrowers with the 140 AMI income limits, and that is what we refer to as our expanded income limits. Our expanded income limit options, those are the larger income limits for conventional loans. They are going to go up to 140% of AMI. So those are very generous income limits. In fact, I'm gonna pick on a few if you don't mind. And I'll say like right away, if you're looking at Dallas County, I bet I have someone from Dallas on here. Dallas County, that maximum income would be 120,000, right? So very generous there. If you're looking at Brazoria County, maximum income would be 111,000 and some change. So those income limits are very generous again with those expanded conventional options. If you're looking at the lower income limits, the charter income limits, right? And the charter income limits, they have that reduced mortgage insurance. And they also have the free homebuyer education. Those charter income limits for Brazoria, for example, you're looking at 63,840 for that max income. Dallas, 68,640 for Dallas. So those are still really great income limits. And those lower income limits for those conventional options, remember they do have that benefit of the reduced MI. And borrower paid monthly and single premium plans are permitted. And so those loans that meet that below 80 AMI are those charter level income limits for conventional loans, right? Here's a little overview there for them because I want to tell you guys, this is really a powerful conventional option. And a lot of times you're going to find that this will produce a better house payment for your home buyer than the FHA will. And it goes back to the fact that we are working with those reduced income limits, right? We don't have any loan delivery fees attached. So we're able to give them a really great interest rate. And that helps, of course, make that mortgage payment more affordable. And then you add into it the reduced MI that's provided. And so you'll see that, say, for example, in the 97 LTVs, that reduced MI would be 18% coverage. So normally, right, if you're doing a normal, regular old conventional loan, that MI coverage would be about 35%. So you can see there's a great savings there with that 18% MI requirement. And it goes down from there. 95 LTV, you're looking at 16% coverage. 90% LTV, looking at 12%. And then down to 85, you're looking at 6% MI required. So really, definitely a value add when you're looking at what we call those charter level, those below 80 AMI conventional loans with our Fannie Mae option. So eligible first mortgage loans will be those 30-year fixed rate FHA and Fannie Mae HFA preferred loans only. Remember, it's purchase transactions only, so you can't use our product to refinance anybody. The Fannie Mae HFA preferred loans, charter level income limits, right? So Fannie Mae HFA preferred loans, charter level income limits are going to have those reduced MIs. Your FHA is going to have standard MI. No pre-close compliance review required. So that means that we're not going to hold up anything. So there's not any time add to the transaction, right? So you're not going to send anything to SETH. There's no 2-day review of anything we've got to do. Your loan is going to be underwritten and away it closes. So it should walk, talk, and act just like a regular mortgage loan. So borrower paid fees, always very important to know. So origination is set by the broker. Max broker compensation not to exceed the lesser of 2% origination plus processing or the amount of the broker's existing comp plan. So again, working with Mountain West, we made this option fit our mortgage brokers so that you can offer it to even more of your home buyers. There's a $995 underwriting fee to Mountain West Financial. Brokers may charge up to $695 third-party processing fee as long as origination and processing fee do not exceed broker's existing comp plan. There will be a tax service fee of $80 to U.S. Bank, a compliance admin fee of $250 to EHP or eHousing Plus. There's a $400 U.S. Bank funding fee and $100 admin fee to Mountain West Financial, again charged on that first lien only. You'll see attorney fee, recording fees, those remain actual. So actual recording fees for your first and second lien would apply there. $295 doc prep fee, Mountain West charged on the first lien only. So those are the fees attached with the program. And I'm going to pause there and ask, are there any questions that you want me to go back on yet? So if there are, you be sure and stop me, because I don't mind covering, going back over anything that I need to, or slowing down if I need to. So lenders roll step by step, right? And this is kind of fun, right? I'm just going to show you, again, how easy this program is going to be for you to use. So loan officer will be responsible for taking loan application and making proper disclosures. Interest rates are going to be found in PML. No buy downs permitted, right? So the rate's the rate. There's not an opportunity to buy that rate down. And so again, loan officers, right? You're going to take loan app and do disclosures just like you would with any loan. So loan goes Mountain West Financial Underwriter will underwrite the loan for approval. And when they underwrite that approval, right, they're going to be underwriting approval for the mortgage and the assistance themselves. So again, you're not going to be waiting on SETH to do any sort of review process. Your Mountain West underwriter, right? They've been trained for the mortgage loan. They've been trained for the assistance, so they will handle all of that. You lock the loan through the Mountain West Financial Lock Desk Department. Mountain West will fund the loan and all assistance provided by the program. Closing department will prepare closing docs from eHousing Plus. So closing department, again, they're going to be providing those second lien docs. Post-closing will retain original note and recorded deed of trust and submit appliance package directly to SETH. And they'll follow any post-closing delivery instructions. So super easy, right? I mean, I think that's pretty easy. So you'll see that it's going to flow just like a regular mortgage loan. We're not creating extra time. And I will find, you'll find some of the same holdups that you would for any loan. So, I mean, your title's got to be in order. Appraisal's got to come through without any delays. All that still needs to happen. Home buyers need to get you documents when you ask. So, I mean, that still remains in effect, but I mean, we're not adding. So just because they're doing the SETH program, that's not going to add extra time to this process for your home buyer. So who signs what, right? And I love this page because this is an awesome page to know. So SETH star notice of DPA. So our notice of DPA is signed by your borrower and co-borrower. It doesn't have to be signed by a non-purchasing spouse. Our SETH star education course, remember, it's going to be completed by borrower and co-borrower. It does not need to be signed by, or completed, I'm sorry, by a non-purchasing spouse. So Homebuyer Education, again, not required for that non-purchasing spouse. SETH partial exemption form. It is signed by borrower, co-borrower, and non-purchasing spouse. And our note, our SETH star note, signed by borrower, co-borrower, and again, non-purchasing spouse. And I tell you what, I just see a mistake. Oh my gosh. So the note and the deed of trust are backwards. I was like, why am I saying this wrong? So and I apologize, when we send this out, we will be distributing this out correctly. But our note is not signed by a non-purchasing spouse, but that deed of trust, it most certainly is signed by a non-purchasing spouse, as SETH is a community property state. And SETH star conventional mortgage or acknowledgement, that's signed by borrower and co-borrower. It does not need to be signed by a non-purchasing spouse again. So remember, non-purchasing spouse, really all they've got holding down to them is going to be that deed of trust. They don't have to take Homebuyer Education. There's not a lot of the disclosures they're going to sign, but they do need to sign that deed of trust. And when we distribute this out, I will make that change. SETH star frequently asked questions. And guys, we get a lot of questions. So I'm going to be pausing to make sure that I'm not going to miss any questions while we're on the training today. So first one on here is going to be, is the assistance forgiven? Right? Yes, it is 100% forgiven after 3 years. And I always say, not all programs are created equally, right? Because there are programs out there where your home buyer is going to have to repay those funds. And it doesn't matter if it's 3 years from now, 10 years from now, or 30 years from now. That home buyer is going to be repaying those assistance dollars. And that's not the case with the SETH star program. And I'm going to tell you, What makes somebody really sad is when they learn after closing that they're going to have to pay that back, and they'll say, no, you told me it wasn't, I didn't have to, and they're really not happy. So again, we believe that forgiving is good, right? We want to set these home buyers up for success. So again, that assistance is forgiven after 3 years with the SETH STAR program. So can you combine the SETH STAR program with MCC programs? Right? Very important. So yes, you can. I mean, MCC programs are so valuable, right? I mean, there's just a great add to the program. And a lot of times when homebuyers are eligible for assistance programs, they're also eligible for the MCC programs as well. So you can combine SETH STAR with any available MCC, or of course you can combine SETH STAR with the SETH MCC. But you can combine SETH STAR with any available MCC. We just ask that you follow those MCC guidelines for fees and qualifications, because a lot of times your MCC programs will have a little bit different income limits. They will have, I guess I shouldn't say might, they will have a first-time homebuyer requirement. So you've got to be sure that you follow MCC guidelines, if applicable, any MCC program fees. But most certainly you can combine with MCC programs. Can the MCC benefit lower the DTI? And I say yes, just follow agency guidelines on how to apply that benefit. So, but most certainly you can use that benefit. Remember, the example we used at the beginning was, if somebody qualified for that $2,000 max MCC tax credit, right? Divide that max tax credit at $2,000 by 12, be $166 a month. And that $166 a month could be used to qualify your home buyer for their mortgage loan. So yes, definitely you can use the MCC benefit. Do you require a non-purchasing spouse to sign the second deed of trust? And the answer is yes. Since Texas is a community property state, we are going to require that non-purchasing spouse to sign the deed of trust. Now remember, the non-purchasing spouse, right, they don't have to take homebuyer education. We're not looking at family income for SETH STAR, so we don't have to count the non-purchasing spouse's income when qualifying for assistance. But that non-purchasing spouse does need to sign that second lien deed of trust. Do you require 3 years tax returns? And I love to answer this one, right? This is a big old no. So no, SETH does not need 3 years tax returns. So there's not a requirement for SETH STAR to collect 3 years tax returns. And that's because we're not a first-time homebuyer program, right? So there's not a requirement that they be a first-time homebuyer, so we don't have to collect those 3 years tax returns to support that. So I don't need 3 years tax returns. Now the underwriters may need it. So if the underwriter needs it for any reason to support income, right, then that's a different story. If the underwriter needs tax returns, then they're going to need that for income purposes. But the program doesn't require 3 years tax returns, so there's no need to turn that in. The only caveat to that is going to be if you're working with an MCC program, right? MCC program's a little different animal there. MCC programs will need 3 years tax returns, so that maybe that you do need them for the MCC program, but you don't need them for SETH STAR. So can my borrower refinance? And the answer is yes, but if they refinance or sell their home during that forgiveness period or that first 3 years, then they have to repay the prorated balance of the assistance provided. So if they wait until the DPA is 100% forgiven or at the end of that 3rd year, then they wouldn't have to repay any of the assistance provided if they sell or refinance the home at that time. So remember, right, we're going to forgive them monthly. There's no payment to be made, right? We're just going to be forgiving them. So we're going to forgive your home buyer monthly during that 3-year term. And again, at the end of those 3 years, they are not making payments on that second lien. But at the end of the 3 years, they would be 100% forgiven. So they could sell or refinance at that point, right? And they would be, again, that 100% forgiven or not having to repay any of those assistance dollars. So questions, contacts, right? I've got some resources for you there as well. And I am going to pause because I know I covered a lot of stuff. And I wanted to ask, were there any questions, or is there anything that maybe I can cover better for you? And so I'm going to see there and ask if there's anything that you think I need to go back and recover, if there's anything in the chat box.
We did have some questions in the chat box that I did answer on your behalf.
You are so
So,
awesome.
so thank you for that. Are there any other questions that someone wants to raise their hand or ask?
Well,
You
okay,
are
while we're
awesome.
waiting to see if we do, and I'm gonna ask to get a copy of the questions, because I like it when we get questions, right? I mean, it's so fun to get to interact with people. We don't get to get live anymore, and this is a really great opportunity. We've got people from all over Texas, right, on this call, and outside of Texas too, on the call today. So it's a great way to bring us together. We miss being live, so I do have some really fun SETH swag to get out for these great questions. So, keep
Ah,
them coming, guys. But I
I
also
see a
wanted to,
hand up.
you do.
Yes, it's Rod. Can you unmute
Awesome.
yourself?
Hey, Rhonda, I don't know if this is a question or an MWF question. As far as like the locks, I know there used to be a certain time frame to deliver the files to SETH. Is there going to be a period, will the file have to be in underwriting before we can lock it, or is there approval stage? At what stage would it, because the rates, I know they're going to fluctuate, daily. Just trying to figure out time frame as far as lock, when we're able to lock those files.
Yeah, so I'll start, and then I'm going to turn it over to Mountain West. I'm going to start by saying the rates are set by SETH. They are priced daily. I don't know that they will necessarily fluctuate too greatly each day, the way you would on the probably the normal market, if you will. But rates are set by SETH daily, and then I will let someone continue on, whoever would like to take that question and kind of go over your process for delivery and lock
Well,
periods.
it would be your standard procedure, and you would lock your loan through the locks department. So as soon as you're ready to lock the loan, you would do it like we normally would. You would reach out to the locks department to lock that up.
And do you require that the loan be underwritten, or is there like a test, I guess, if you will, for that loan before you're ready to lock them? Do you have any requirements for that, Mountain West?
I'm going to revert to Brian on that or get back to you.
Let me take myself off mute there. I know, Nancy, that was talked when I had a conversation with Angie, talked about, but I don't think a decision's ever been rendered on that. So it is going to be, we're going to have to figure it out.
Okay.
Yeah, I don't have a requirement for that. So I will, definitely, Rod, defer to Mountain West, and we'll definitely follow up and get you that answer for sure.
Hey, Rhonda, if you don't have a requirement, we like the path of least resistance. So we will probably follow your lead.
Yeah, I suggest, and a lot of my lenders will share with me internally that they have overlays and requirements, and a lot of times it is, some best practices like, maybe it's been through underwriting, you're confident in the loan's ability to close and meet that closing date. Maybe that if you're in a situation where appraisals are taking long, maybe you want to say, like, I want to make sure I got my appraisal. So, really, following your best practices, for yourself and managing your locks like that would, be a benefit for you. So I'm going to say that, maybe, Rod, it might be that you may want to internally have a decision like that so that you avoid any rate extensions or any penalties.
And a question has been already submitted to our locks. So as soon as I hear a response, I will share it with everyone, and we'll add it to the FAQs.
Yeah, thank you for that.
You're welcome.
And so I'm going to continue on and be sure that right? Because I told y'all I miss, being in front of people. But the Texas Association of Realtors, they have been a great partner for SETH, since COVID took over and kind of forced us to all go virtual. Texas Association of Realtors, they came out and they were like, hey, Rhonda, we'd like a class, about SETH. We want a 1-hour continuing education credit. They sponsor it. I can offer it free of charge. So I say that to let y'all know that, if you have some realtor partners that you'd like to be in front of and like to talk about the program, and then we could offer realtor training as well as a 1-hour continuing education credit at no charge. That would be something that I would be more than happy to work with you and set up. So all I do is ask you to email me so that we can, plan that and get something like that in the books. But I do have, flyers. I've got Facebook posts. I've got, some fun stuff that I can share. And of course, we've got that continuing education course as well. In fact, I think I have 2 of them coming up in October. Those are offered around the state with TAR. Like I've got one in for El Paso, and I've got another one coming up for Corpus Christi. And we had one the other day that I laughed we did with TAR. And it was with, these different Texas organizations all across Texas. Like I had El Paso and Grand Prairie, and I had Galveston on the same call. And it was like, you're all across Texas, doing the training. So, it's virtual. So it's really easy for us to be accommodating of schedules and stuff. So keep me in mind.
Yep, we will. And I got to applaud you. I didn't think you liked El Paso, but I guess you recovered yourself. So
we did. I kind of halfway expected. I had some, we can do the county of El Paso. I just can't do the city.
I got you.
So,
well, the
I
only
had
thing
some
that we
training on that call.
yeah. Well, I'll tell you one thing that I'm really interested in, and I love where you're heading with this. Now, keep in mind, we deal with the mortgage broker. They're our business partners when we do things, but this would be a giant value add for the mortgage broker to bring on their agents because they deal with the agents versus what we do. And so, a coordination between the RVP, ourselves, and Nancy to kind of coordinate this thing and make it a big call would really be a giant value add.
Oh, definitely. Most definitely. I mean, it's fun, and it allows, your mortgage brokers, right, that opportunity to flex their muscles and show, the assistance and the programs that they have available. It's about time that we got programs like these out to the mortgage brokers. And I mean, again, hats off to Mountain West for making this possible. I mean, I really appreciate the commitment that y'all have to providing this out there in the communities. So it's definitely awesome.
All those kudos are going to Nancy. She's Nancy and Tammy. Those two are doing the legwork, and Kathy on the phone. All
And
those
Kathy.
three. That's right.
Yes.
Kathy as well.
Yes, so everybody, thank you so much. We do have one more question, and I did want to share Carlos's question because he really did have a great question. And it's, what should the total turn time be quoted from submission to fund? And so I replied with the standard DPA turn times apply right now. Currently, DPA turn times are looking at files from 9 to 10. Of course, that changes daily, but I did want to share that as well. And there was also a compensation question. So if the broker has a 2.7 comp, they will max out at 2%, and that is correct. The lesser of the two will apply. And we have one question from Connie, and she said, do y'all plan on adding the areas that SETH are not approved in? Did I say the y'all right? I'm from California. So
Yeah,
I don't know if I had the right accent.
That's funny. So
kudos to Nancy with the y'all. Good job, Nancy. It'll add on to you. You just wait. The y'all kick in.
Become easier, huh? That's funny.
Thank you.
So yeah, I kind of halfway wondered if at the end of our training call last month, or was it last month already? I think it was in August. I wondered at the end of that if I wouldn't hear back from El Paso because they were making a lot of noise on the call that they were excluded. I'm like, well, I'm sorry. So they're like, well, that program's ended. We, and I was like, well, okay. Well, I mean, if your housing finance agency wants to join, that would be great. So really, I mean, it's not that we want to exclude them. It's like we're doing it to be nice and to be good partners. We have had McKinney in the past participate, but recently McKinney pulled back out, and I guess they have another program out there that they thought we would compete with. So really, it's up to those areas. I mean, I'm fine with it, but I mean, you think like, I mean, I'm giving money, so I mean, in all fairness, it should be me going, no, 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 I don't want it. I have to give away more money. And here I am, I'm like, I'll give you money. So yeah, we're okay. We're good. If we have some partners reach out that are interested in joining, we'll be glad to help them. There's an agreement that association would sign so that we can pay them money. So how awesome is that? And I'll tell you, some of the locals, we pay quite a bit too. If you can imagine, what we pay to the Harris County HFC or the City of Houston HFC, those are some big areas. We've got some big ones in around the Travis County area that get quite a bit. I've got some out toward Dallas that get quite a bit. So I mean, yeah, it's pretty awesome and it's our opportunity again, supporting our partners. We're doing this in partnership with other locals. So it's cool. We like it. We like it. And of course, we consider Mountain West partners. So thank y'all so much for offering this.
Thank you. So, any more questions? Going once?
Well, hey, I was going to ask when Beth is coming out, but I thought that'd be too childish, so I wasn't going to ask that question.
I get that a lot.
I bet you do.
Don't call
Thank you.
SETH.
I'm even going to admit it on this call. I didn't even know what SETH stand for. So thank you, Nancy, for explaining. It was either you or Rhonda explaining that right at the very beginning. So I appreciate that.
Funny.
Thank you. Well, then I will go ahead and give back everyone their time. Here at Mountain West Financial, we are continuously looking for strategic products to arm you with all the tools needed to keep you competitive in the market. We're currently offering over 100 down payment assistant products, MCCs, and grants to help you make homeownership a reality. Now, I know you were hanging on to every word and memorized everything Rhonda said, right?
Right.
Just kidding. Just kidding. This training was being recorded and will be available via our intranet. You can also find it through our AMP system in our intranet. If you don't know how to access it, please let me know. Or email us at strategicproducts@mwfinc.com. With that said, I will let you go and make it a great day.
Thank you.
Thank y'all.
Thank you,
Bye.
Nancy. Thank you, Rhonda. I
Thank
appreciate
Good to
it.
see you. Bye, Rod.